If you've breached the annual allowance, that's the amount that you can be contributed into your pension each tax year, it's your responsibility to report it to HMRC, and you usually have sole liability for paying the charge. Your pension scheme administrator must send members a pension savings statement when the annual allowance is exceeded within the scheme, or if the money purchase annual allowance has been triggered and exceeded. The annual allowance is currently £40,000 a year, or a maximum of 100% of your pensionable earnings. The money purchase annual allowance restricts your pension contributions to £4,000 and is triggered once you've started drawing in income from your defined contribution pension. Take a look at my separate video explaining these two allowances in more detail. However, not receiving a statement doesn't mean you are in the clear. You might be subject to a lowered tapered annual allowance if you're a higher earner or have made contributions to a number of schemes that together breach your available allowance. If you are unsure of the total accrual or the amount that has been contributed in any given tax year, you can request a statement from any scheme of which you are a member. Receiving a pension savings statement doesn't automatically mean there is a charge to pay. Even if the £40,000 limit is exceeded, carry forward may be available to cover the excess, in which case no charge will arise and there's no need to report it to HMRC. So let's just delve into the carry forward rules a little further. For any unused annual allowance from an earlier tax year to be carried forward and used in subsequent tax years, the full annual allowance in the tax year being reported on must first be used. You must also have been a member of a registered pension scheme in the tax year for which you have the unused allowance. If you're a higher earner subject to the tapered annual allowance, where your annual allowance is reduced to just £4,000, your unused tapered allowance amount can be carried forward once your current year's allowance, which may also be tapered, is used. For most savers, annual allowance can be carried forward from the 3 tax years immediately before the tax year being reported. Now, once the money purchase annual allowance has been triggered, reducing your annual allowance to £4,000, then carry forward is not available in relation to any defined contribution schemes, but can be used if you're accruing benefits in a defined benefit scheme. Remember that when calculating the input amount for any tax year, the annual allowance covers all employer contributions, personal contributions, and tax relief received in the scheme via relief at source. HMRC has a calculation tool available on their website, so I'll put a link in the description below. Now, let's assume that you have breached the annual allowance and there is a charge to pay. What next? Well, you must report it on your self-assessment forms. Firstly, you should know that the fact that there is an annual allowance charge makes no difference to how tax relief is claimed. Under the section on paying into registered pension schemes, the amounts should be completed regardless of annual allowance available. Claiming tax relief and paying an annual allowance charge are two separate things. Because an annual allowance charge attempts to recoup the additional tax relief claimed above the available allowance, it is important to claim that relief first, so you don't pay a charge for relief that hasn't been received. If you enter an amount in this section of more than £40,000, it doesn't automatically mean that HMRC is going to hit you with an annual allowance charge. So where exactly is this reported? The excess must be reported in the Pension Savings Tax Charges section on page 4 of the Additional Information section of Form SA101. It is only the amount reported here that will generate a charge. The total excess is effectively added to income for the year and income tax is charged accordingly. There is also a box relating to the annual allowance charge paid or payable by the pension scheme. If the annual allowance of £40,000 has been exceeded in one scheme, the tax charge is more than £2,000 and notice is given to the scheme by the 31st of July 2022 in relation to the 2021 tax year, then the scheme must pay the charge. The amount the scheme is paying should be entered here and the scheme administrator will become jointly liable with you, the member. In relation to annual allowance charges arising from exceeding the tapered allowance or money purchase annual allowance, then liability will always remain with you, the member. A scheme may agree to pay the charge on a voluntary basis, in which case the information should be entered in the same box as when the compulsory scheme pays option is used. However, payment is due by the self-assessment deadline of 31st January, and schemes only pay the charge on their quarterly return. So there could be a risk of late payment charges. The deadline for ensuring there is no penalty for using voluntary scheme pays is the 30th of September. Thanks for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help people live successful lives. And in my experience, that often involves understanding your money. I hope you've enjoyed this video. If you have, please press the like button to help more people like you find my channel. And of course, subscribe so you get notified of new videos when I put them out. For now, I'm Justin King, helping you live your best life.